Basically, if you look at the tech stocks in particular, and if you just look at the top 10 tech stocks, you've had a big run up in the NASDAQ. If you look at the equal weight S&P, there's been virtually no change in the past, I don't know, since in the last year or so. We've been going sideways. And what this tells us, and if you look at the bigger cap tech names, they're all up. I mean, if you look at Google, Amazon, NVIDIA, Apple, obviously, and Apple just made a new all-time high, I believe, yesterday on a stock basis, not on a market cap basis, which I'll cover in just one second, is that we have those stocks up 30, 40%. The S&P in that same period is up about 3%. So you can't really say that we're in a new bull market when the remainder, when you have 500 stocks in the S&P, 10 of them are up 30 or 40%. The rest are averaging a 3% gain for the year. So just keep that in mind. That's a really, really important point here. How you have a very steep incline in the NASDAQ, but the S&P, if you look at equal weight, is not showing you that same result. To me, that's bearish. That's telling you that the rally is being led by a few names, which are looked at as being kind of the safety plays, where everyone's jumping into them for kind of safety and for alpha, while everything else is being left behind.
Bitcoin aborted a fresh attempt to reach $31,000 on June 29th, while traders waited for bulls to succeed. Now caught between $30,000 and $31,000, BTC lacked the impetus to continue the prior week's uptrend or reverse downward. For market participants, however, there was increasing reason to believe that flipping higher resistance levels to support would come next. According to CryptoCon on Twitter, it is very likely that hash Bitcoin will reach the November 28th cycle theory target of $34,500 in the next push higher. My model has nailed every prediction since its creation. Bottom in November 2022. Best cycle buying prices in the green year time to accumulate is coming to an end. Hello and welcome to Money Talks. In today's video, we will take a look at Gareth Soloway's analysis of the S&P 500 and his advice on the best move to do in the upcoming bull market. So without further ado, let's get started with the video.
Looking at everything I've gone over, it's a lot of information, right? So we have to kind of understand, and we have to take it with a grain of salt. We have to understand volume plays a role here. But to me, and again, I've stuck with this the whole way through, I look at charts right now and I see major euphoria, which is a warning sign. I see major bullishness, which is a warning sign. I see major risk-taking on zero-day options, which is a warning sign. And I would continue to advise people and be very aware to be very cautious in this marketplace. All right, this is a market where the VIX is trading at levels where there is no concern. All right, did the markets price in the Biden administration maybe limiting the ability for chips like NVIDIA to be sold to China? No. Did the market kind of potentially factor in any sort of risk with a coup in Russia? Well, luckily that didn't pan out, so the markets were okay with that. My point is this, is when you have a VIX this low and you have time counts on the long side where these charts are ridiculously extended, where the weekly RSIs are in the 80s for a lot of these large cap tech names, you need to be defensive. Mark my words, folks, whether it's in the next week or two or not, there will be a corrective move here that is going to shock people. And it very likely will be a top that we will look back at and say, wow, remember when we had that bounce? Remember when the market fell 37 and change percent until October of 2022, then rallied 37.5% back up, and then we dumped out to October lows.
Popular trader and analyst Rect Capital, meanwhile, eyed equally promising signs on monthly timeframes ahead of the June 30th monthly candle close. BTC is positioning itself for a monthly close above a resistance that had rejected price for the past 3 months. And now BTC is holding comfortably above that same level, black, he commented on an explanatory chart. Reacting, CryptoCon described BTC as primed to launch into the resistance zone. Markets are looking ready for another leg upwards, Michael Van de Poppe, founder and CEO of trading firm 8, added. Bitcoin looks good, but altcoins are moving in tandem too.
When you buy a Bitcoin, you're buying 1/21 millionth of all the money on the network. Or all the money in the world that's ever going to be on that network. Okay, so would you want to own 1/21 millionth of all the money in the world in 10 years, 20 years, 100 years, 1,000 years, 10,000 years? The product's not obsolescing. It's 1/21 millionth of everything. You see, the iPhone will obsolesce. One day you'll be using Apple Vision, or maybe they'll put a telepathic implant in your brain and you won't need phones and you won't need goggles. And maybe you won't need televisions. Those things can obsolesce. But will you want 1/21 millionth of all the energy in the human race? Probably. Like the whole point of pure energy, right? Einstein said energy can neither be destroyed nor created. You can just transform it, right? It's a pure idea. And it's an idea that doesn't have competition because of the Immaculate Conception. There's one Bitcoin. There's one network that was created by a nameless, anonymous figure, Satoshi. And Satoshi gifted 1 million coins to the universe. Never ran an ICO. Never kept anything from a pre-mine. And the network now is just owned by the people. So how do you actually compete with that? It's hard to see how you compete with a pure thing like that. So it's a digital monopoly with no labor risk, no war risk, no product risk, no execution risk.
The week's major macroeconomic data releases still lay ahead, with Jerome Powell, chair of the United States Federal Reserve, set to deliver a second day of commentary on economic policy. June 30th remained the key release date. Personal consumption expenditures, PCE figures, the preferred inflation measurement tool for Powell, were tipped to be the volatility catalyst for risk assets. Beyond macro, the June 30th options open interest expiry was also a talking point, this coming in at a huge $4.7 billion. Asset management giant Fidelity Investments is again trying to launch a spot Bitcoin exchange-traded fund, according to a Thursday filing. The move comes 2 weeks after BlackRock filed for a spot Bitcoin ETF, which has long been opposed by the U.S. Securities and Exchange Commission. Other firms appear to have taken BlackRock's filing as a sign that the SEC's stance could soon change. Since then, WisdomTree, VanEck, and Invesco have taken the initial steps toward their own funds. Cathie Wood's ARK Invest filed for changes to its proposed Bitcoin fund Wednesday that brought it closer in line with BlackRock's application. The SEC has so far rejected every spot Bitcoin fund application on which it has made a decision. The commission is in a legal battle with Grayscale about its decision to block the conversion of the Grayscale Bitcoin Trust into an ETF. A decision in that case is expected later this year. One of the SEC's key concerns about a spot Bitcoin product is transparency in the market and the potential for manipulation. The BlackRock filing includes a proposed surveillance sharing agreement that could alleviate those concerns. The subsequent filings have similar proposals. The SEC has already allowed the creation of ETFs that track Bitcoin futures contracts, including the ProShares Bitcoin Strategy ETF, BTO, that has more than $1 billion in assets. The first leveraged Bitcoin futures fund hit the market Tuesday. The new rush for ETFs appears to have buoyed prices for Bitcoin. The digital currency was trading near $30,500, up from below $26,000 prior to the BlackRock filing.
And so, if you study business, let's take McDonald's. McDonald's is a great business, but the reason they're a great business is so they don't really take that much risk. All the franchises take the risk. And so it's possible for every restaurant to lose money in the McDonald's chain, and the McDonald's Corporation still makes money because they've laid off that risk downstream. Other people risk their capital. So Bitcoin is kind of like this viral ultimate banking monetary franchise where banks will take risk, miners will take risk, individuals will take risk, companies will take risk. When the risks pay off, the Bitcoin holders benefit. And when the risks don't pay off, the people that took the risk pay the price, but Bitcoin just continues. It's very anti-fragile.
So, what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.